When you wrote your book all that time ago, Anatomy of a Bear, you talked about how the next great bear market would play out. How does what we've just talked about translate into your view on markets as a whole?
What I note from financial history is the thing that can bring markets down quickly is deflation, and runaway inflation tends to bring them down more slowly. And I just see so much evidence of the deflation out there that I think that's what brings them down. And you know, I've been saying it for 3 years, so maybe one day it will be right.
What will be the turning point that makes it right? I mean, you say you see deflation all around you, you expect more deflation, so why haven't markets come down already? This presumably is down to the constant money printing.
The dollar, I think, is key to this. I think that's the catalyst. You know, I can analyse all these factors, but until the dollar starts to go up, that's when you say, well, this could be the time. So people will ask, why? What's so important about the dollar? Well, there's so many people who link their currencies to the dollar. So if you link yourself to a strong currency, then you have to force your currency up in line with the dollar. That on the whole forces you to a tighter monetary policy. The world is full of people who borrow dollars, take the money and invest it in RMB, invest it in Indian currency, invest it in Brazilian real, and they use it to fund assets or purchases in those currencies. Now, when the dollar starts going up, you're effectively short the dollar. There's an old quote in financial history from Daniel Drew, one of the first great speculators, and it goes like this. It says, "He who sells what isn't his'n buys it back or goes to prison." If you've borrowed dollars, put it in RMB, and the dollar starts going up, your board is going to say, cover it. Don't cover 100% of it, because it may not continue, but cover a little bit of it. So there's these very rare periods in financial history where you get forced buying of the dollar as people seek to cover it. And if you look at the chart of the dollar, it looks like we're there. And forecasting currencies is incredibly difficult until you get forced buyers. And it's beginning to look like that. And there's nothing in the historical record that suggests emerging markets will ride that out smoothly. This has always been the time when they've got into trouble. So, you know, the forecast was there 3 years ago. Deflation, well, we certainly haven't had inflation, but the thing that might mean this is the time is the strong dollar.
So how do we invest? Assuming you're right, which I'm sure you are at some point.
Well,
how do we invest to deal with a really fairly extraordinary environment?
Well,
like this?
I believe that the beauty of being a private investor is that you can do nothing. Now, I know people watching this would not agree with that, but believe me, your options to do nothing are significantly stronger than the ability of a professional investor.
But there's no such thing as nothing, because nothing is holding cash, right?
Well, that's what I mean.
And this is not a nothing.
Well, that's what I mean by doing nothing. In a period, unless you think I'm completely wrong and we're heading to rampant inflation, and of course I could be, and if that's your view, you don't own cash. But we're at least in a period of low inflation. I think most people would agree with that. Now, in a period of low inflation, you're losing something on cash, but perhaps not a lot on cash. It's a quote, and I've often tried to find out where I read this by Adam Smith, but he once said that the greatest cause of distress amongst men of wealth is feeling that they have to do something. Apparently Winnie the Pooh said something very similar. So if Adam Smith and Winnie the Pooh thought it was good advice, I think it remains good advice. You have to wait for the right opportunity. I mean, if I look back in financial history, now certainly before World War II, the great financial success stories, the great wealth accumulators were people who had cash at the bottom to buy, whether it was Rockefeller, JP Morgan, Mellon. So if you, like me, and you genuinely believe that deflation is coming, then you take from the playbook of Mellon, Rockefeller, Morgan, Carnegie, and you're ready to buy. So it's not doing nothing, as you say, being in cash. But in a period of low inflation, it's as close as you get, and you wait for what Buffett calls the fat pitch. And I can't, there are very, very few fat pitches out there. But in a world of deflation, there'll be quite a few.
Is your own money in cash, Russell?
It is, largely. It has some Japanese equities hedged back into the dollar, and apart from that, it's pretty much cash.